Hi, Jonathan York by Financial Partners, looking at investment markets. September really finished as a pretty brutal month. Dow was down nearly 9%, the S&P was down over 9%, and the Nasdaq was down over 10% for the month. And that really was a pretty brutal sort of month, really, as the market really grapples with the worries about inflation and central banks increasing interest rates. And obviously, with those interest rates increasing, with the ongoing impact potentially on earnings and valuations. Many shares are down now over 20% for the year. A couple of the big sort of heavyweights that are held by many US investors, Apple and Tesla. Apple are down over 20%, Tesla's down over 30% for the year. But then the start of October, the first couple of days, the Dow was then up over 1,500 points in 2 days. Now that's really pretty unprecedented. One of the biggest moves for a long time in a 2-day period. But also as well, it's really across the board. It wasn't just a couple of stocks that were seeing the increases and upward valuations. In fact, the S&P, 97% of the S&P 500 components were up. And that's really pretty unprecedented. Now, what that has also seen is that the 10 years backed off from nearly 4% to around sort of 360 currently. Now, while the Fed is still expected to increase interest rates at the next meeting, more than likely by another 75 basis points, that'll take the sort of target range to sort of 3.75 to 4%. Now, potentially as well, is that starting to then get to a more sort of neutral stance when the Fed can then start to not so much take its foot completely off the gas, but just sort of potentially reduce those increases down to maybe 50 basis points or even 25. Because at present everyone's talking about a recession, but it'll be a recession like never sort of seen before. You still got sort of rising job applications, but in an interesting move, you actually saw the number of job openings fall by around 1 million in August. So that figure's now sitting around sort of 10 million job vacancies and job openings, as opposed to the 11 million that was sort of a couple of months ago. Now, while that's still a big number, it does sort of hint that potentially hirings may be sort of slowing down just a little bit. Which is obviously what the Fed needs to see to bring down inflation. Now, what it does make the next earnings season, which is coming up very shortly, will be very interesting now to see how this sort of transpires. Because certainly, price earnings ratios currently on the S&P is trading around sort of 17 times. Now, obviously, there's also as well, we've got the midterms coming up in November, and that will be pretty interesting to see how that sort of transpires as well. And also the US as well might get a little bit of a boost in a strange sort of sense as well, because certainly the destruction from Hurricane Ian in Florida has caused major devastation, and that's going to take quite a time to get recovered and repaired. In the meantime, you've still got the Ukrainian war taking place. Russia has now annexed the sort of four states that supposedly were sort of pro-Russian. After the Russian staged referendum in the eastern states of Ukraine that pretty much had been sort of taken over by Russia. But in an interesting move, just a day after President Putin announced that those states had been annexed and were now part of Russia, we started to see Russian forces sort of pulling back and being driven back by the Ukrainian forces. So areas around the sort of Donbass area now that were supposedly under Russian control now have now been pushed back, and a couple of the major cities now are back in Ukrainian hands. Now, obviously, President Putin's trying to sort of spin this as saying, this was a sort of planned and, a planned sort of withdrawal now once it was under Russian control. But again, it's just another humiliating defeat for President Putin. And with every humiliation, he keeps on sort of coming up with, Russia will do whatever it's needed and will use whatever weapons at its disposal, sort of hinting potentially at sort of nuclear strike. Now in the UK, the Chancellor Kwasi Kwarteng has now come out with a U-turn on the tax cuts, and is now abolishing the reduction of the highest rate tax cut. Now that saw a pretty big rally in the British pound on the foreign exchange markets. Remember that was trading at sort of record lows. That's now back well above that sort of 110 versus the US dollar. Now again, that's a pretty major U-turn from the new government under Liz Truss, and really just sort of potentially sort of undermines her credibility a little bit. So much so that apparently Boris Johnson is favoured to take over from her within 6 months. Which is really quite ludicrous if you look back on the reason why he was kicked out in the first place. But on the positive side in the UK, GDP did actually rise. It was only a small rise there of plus 0.2%, but it was actually up. So it was certainly a little bit of positive news there for second quarter GDP. Europe doing all it can to try and safeguard, potential sort of energy crisis over the winter months with the Russian gas supply. So while we do expect the ECB to increase rates again by 75 basis points at the next meeting, it'll just be interesting to see what rhetoric comes out with that rate hike. Now in Australia, the Reserve Bank there did surprise the markets just a little bit by only increasing rates by 25 basis points, taking the cash rate now to 260. Now certainly the Reserve Bank of Australia has been one of the more dovish central banks over the last sort of 6 months in terms of the interest rate increases. But also as well, it came out with sort of pretty valid point that you've seen pretty much sort of rate hike after rate hike coming through, and is yet to see the full impact of that on the economy. Because certainly what they don't want to do is sort of overhike and then have to sort of cut rates to get the economy back into an expansionary mode. The Reserve Bank to be increasing rates, but just at a 25 basis point level now over the next sort of maybe 2 to 3 meetings. And that wasn't the case here in New Zealand. The Reserve Bank increased the OCR by another 50 basis points, taking it up to 3.5. And most analysts, again, still expect another 50 basis point hike at the next meeting. That'll give a year-end OCR of 4%. Now that's obviously having a bit of an impact on the housing market. House prices are falling, but again, they are still only back to levels sort of seen about 12 months ago. Now, still got issues with the visas for tourists coming into New Zealand. The government is saying they're processing them as fast as they can, but there's still around sort of 30-odd thousand waiting to be processed. Now, if you're looking for tourists to be coming and spending money over the sort of summer months, you really need to get those visas approved. Now, in the latest look at the government books, the sort of government finances are in much better position than first thought by around $9 billion. And that's predominantly because of a higher tax take. Which then sort of leaves the question, obviously with the election coming up next November, will we see tax cuts now coming through? Because certainly the government at present in the polls is behind, and if there was an election tomorrow, it looks like they would be removed from power. Because certainly, obviously, the cost of living crisis is still here. Potentially the government has come out and said now that come January they will be reinstating the 25 cents on fuel. So that's just going to add to the further inflationary pressures out there. So if you are looking for income options, plenty of alternatives available out there, and go to the website www.baitfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.